You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributor to Backroom Technician. This week on The Biz, the Disability Insurance for Business series, our tribute to Disability Awareness Month, May 2013. And on today's show, Disability Overhead Expense with DI Authority, Dan Steenerson.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And today, day two, DI Authority, author, columnist, writer, and I see some scripts we're going to get to this week on sales strategies, Dan Steenerson. Hey, Dan.
My pleasure to be here.
Day two. Hey, we're really interested today, and I want to unpack this thing. I want to unbundle it, every component. I have so many questions to ask, and hopefully they're the questions that you want me to ask Dan. Dan, we're talking about disability overhead. Now, when I actually originally got into DI, my understanding way back in the day, 30 years ago, when I first became an insurance agent and learned how to sell a little bit of DI for the venerable New England, I used to sit there and say, okay, I got my DI done, and then now I have a business, and I have an expense in my business. Now, when I think about an expense business, I look at my P&L, and then I start looking at accounts payable. Now, I don't know what's the difference between am I too big for business overhead expense or am I too small a business? So let's do that first. Define the parameters. What's a big business? What's a small business?
Absolutely. You know, the fact of the matter is that the closer you are to serving your customers, the greater your eligibility is for business overhead expense coverage. For example, if you're a physician, an attorney, a dentist, you're rendering personal services, you're exactly the right customer for that particular product. Now, that's not to say that general business wouldn't qualify, but let's take, for example, it's a business that has 50 employees, maybe a pipe and supply company, pipes coming in the back door, out the front, and those 50 employees could actually run that business if you got disabled. That would not be a good candidate for BOE.
Now, how do I make the distinction? So if the owner is the franchise player, if that's what I just sort of heard your definition, right? If he's the franchise player in his pipe and they couldn't run it without him, how does that change? How do I actually frame that to the DI carrier?
Yep. So generally what's happening is that the carrier wants to make sure that you have to be an integral part of the day-to-day operations of that business itself. If you leave that business for a prolonged vacation or what have you, and that business is not going to operate, will continue to operate without you, that's not a good candidate.
So when you say big and small then,
yep.
So what's the demarcation line?
Absolutely. So usually you're looking at about a dozen employees. Okay. And that's pretty good for BOE. When you start to get into the 20, the 30 employees, not a good scenario for BOE.
Okay, now let's say I have several little companies. You know, I have a holding company. I'm thinking of a couple people where they might have maybe 2 or 3 companies and they might have 8 to 10 each. They have their own standalone P&L statements, and of course that means that they have their own standalone accounts payable. Is that company still okay even though the major player, the principal, owns all 3? Does the DI carrier look at them as 3 separate entities?
See, that's a good question, Steve. The thing is that they don't aggregate the different entities together. So you could actually qualify for 3 separate policies if you had 3 different companies that were small like that.
Now, when I'm thinking about DI like that, are there anything like, let's say I own my building and I want my expenses. Are they going to pick up a mortgage? Are some okay with that, some not?
Now that's a real concern when it comes to business owners because very often they will own the premises where they're operating their business. Most carriers are going to say, no, we will not cover the principal payment if you became disabled. However, they will cover interest and depreciation, which generally meets or exceeds the payment unto itself.
Well, let's talk about that for a second because you just caught my mind here. So they're willing to pay the interest and the mortgage depreciation itself.
Yes.
They're okay with that.
They're okay with that.
Okay, now I'm just curious from a philosophical standpoint, they're not okay with paying the whole thing because?
Well, the carriers feel that they don't want to help fund the purchase of an asset that you may be purchasing.
So the actual expense load of a company is one thing. The actual asset that's growing or maturing, or hopefully it's gaining, and hopefully the real estate market's off the floor now, right? Is that what you're saying? That's the
right.
differentiation?
That's right.
Okay, so but really when you think about it, would you say you thought the interest and the depreciation might be big enough to play?
Oh, absolutely.
So it could cover it anyways?
It could cover it anyways.
Now, isn't that funny how, it's just to me, again, it comes into this definition because I don't want to pay for your asset that's growing, but I'm willing to do an on-paper accounting depreciation to pick it off as the difference.
That's right. That's
Wow.
right. That's
Wow.
right.
See, this is why I say you never know. You say, well, they don't do it, but they kind of do.
They kind of do.
And that's why you
That's
kind of
right.
have to know. That's why I have Dan on, because that differentiation would have taken people, they would have said, oh, we can't do mortgages.
And that's a very important point, and the reason why is because the two largest expenses on the P&L is going to be the actual rent, the premises, and it's going to be the employees or the salaries of the employees.
When they think about the salaries of the employees from BOE, does that salaries not Social Security, or that's all in? FICA, FUTA, SUTA, all in?
That is all in, including any bonuses or commissions, any taxes that are being paid for that individual employee, absolutely.
Well, wait a minute now you got me on another line of thinking. So if I have my business and I buy business overhead and I have an issue in February or March and I need that expense to be paid because I'm having problems myself and I'm the franchise, how can I anticipate I'm going to have bonuses at the end of the year? I mean, and they're picking that up. Do I have to tell them? Is that based on the prior year then?
Well, it's very interesting because you may buy as an example, a $20,000 a month benefit, but let's say in this month you only needed $15,000 based on the accounts payable. But next month it was $25,000. They would actually take that $5,000 you did not use, apply it to the following month, and pay out the $25,000.
So it's an overall aggregate benefit then?
Yes. So look at it as though it's a capital account.
Wow.
If you bought $20,000 a month over a 12-month benefit period, it's going to be $240,000.
Somehow, some way. Now, if you don't use it all, though, if you were below that number, then that's just the way it is.
Yes.
Okay,
that's
so
right.
they're never going to pay. But if you were, as long as it didn't exceed that over a 12-month calendar year, is that way I'm understanding?
That's right.
Well, to me, this is a whole new way to play because a lot of people, we have so many people that are self-employed, so many people that run their own show, S-Corps, LLCs, closely held corporations. This could be a whole new way to get into business owners just on the issue of BOE. When we come back from the break, we're going to continue our discussion on DI overhead, part of our disability insurance series with Dan Steenerson. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
You know, living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Dan Steenerson. And remember, you can order today's materials at thebiz.tv. And while you're there, click on Backroom Technician icon for a 30-day free trial to access the best needs analysis and sales support material. Hey, on there, we have a huge DI package, both business succession and individual. It's huge, and I recommend on your 30-day free trial, pull it down. If we're interested in you in DI, go out to Backroom Technician on that icon on thebiz.tv, hit it, and download. We're doing everything we talked about last week with Marcy. I pulled all that from Backroom Technician. It's just great. I've been using it for 22 years. And remember, we are talking about tax things now and things of that nature and accounting thing. Before you move forward with anything that you hear Dan and I talk about, always consult your tax advisor, and of course, if you're FINRA licensed, your broker-dealer compliance department. We're talking about business overhead. I kind of find this intriguing. I mean, when I'm thinking about paying my expenses, now paying me, I'm on my disability, but now my company's is getting paid, and if I'm the franchise player, that really matters.
It absolutely does matter.
We'll talk about this. So you have a scale script, and again, I'm just going to show you this. Dan has so many of these scripts, and if you say, Steve, I want all, say, I don't know how many you have. I have 7 of them with me. If you say, I want these, we'll send these to you. Just write me at thebiz.tv, and I'll send them to you all day long. This one's on, I love this because you know how we get into acronyms. right? We're crazy in our industry. He has this thing called selling BOE. Don't forget PWB. Okay, I bite. What's PW? What are you doing here?
Well, it's a premium waiver benefit.
Okay.
And basically, the waiver of premium is 90 days. However, when you take a look at the plan design of a typical business overhead expense policy, you're looking at a 30-day waiting period and generally a 12-month benefit period. Yeah, you can go out to 2 years, but it doesn't make any sense. I say curl it back to 12 months, save the extra premium, but also maintain that 30-day waiting period. Now, what happens if you go out on claim after 30 days? You're not on waiver of premium. You don't get on waiver of premium until the 90th day. So what's going to happen there is that you can actually use that premium as a reimbursed item under this benefit plan.
No, you just caught me here. You just kind of poo-pooed 2-year POA. So tell me, I have 1 year business expense overhead. I have 2 year. Did I just catch you that you're not excited about 2 year?
Well, I'm glad you asked that question because very often producers will go ahead and sell a 2-year benefit period. But what happens in the event that you're well or you recover prior to 2 years? And generally speaking, that recovery does come within the first year. So we feel that the extra year that you're paying for is probably overkill.
Now, is that is it a bump up in premium to go the second year? I mean, it's pretty expensive.
Well, I would say you're talking about 30% more in premium.
Okay, so you have to weigh out whether this 2 year for 30% more than the 1 year is worth it. And the stats, if I'm hearing you correctly, the stats are most people are back before 1 year's out.
Yeah.
All right. Okay. Well, that's fair enough. Now, when we're talking about plan design, you just brought up. I got elimination period. I got the waiting period. I got the now. And is there a waiver involved in this in your PWB?
Built in.
Okay, so it's built in. So you got to find out when did the clock start for all these little events.
Right.
I
That's
mean,
right.
this. I hate to say this. I feel like I'm in 4 different time zones.
Yeah.
Because I don't know when does it start, when does it start. I think that's your next thing, Dan. I'm just telling you not to. I need a new strategy that says a clock and what starts when. All right.
There you go.
And make it look like an international. Looking at different places. Talk to me about. I never know what's from a statistical standpoint. Should I do the 30-year wait, 90-day wait, the 30-day wait, the waiver premium, the 2 year, the 1 year? It's all about duration issues, and I never know how do I measure bang for the buck especially when we're talking business overhead?
Right. Well, first and foremost, let me start out by saying that 90% of business overhead expense policies are sold with a 30-day wait and a 1 year benefit period. Now, there's a reason for that 30-day wait. That business is the goose that's laying the golden egg. It's cash flow. You've got to keep that cash flow going as long as you can without any interruption whatsoever.
Well, when I'm thinking that if that becomes the boilerplate, so if I'm going to order a bid on business overhead, I should be pretty much thinking, okay, 30-day wait, 1 year, here's what I'm bringing into offer. What financial docs, because I know this all has to be justified, what do you need to play this game?
Well, it depends. It depends on the benefit amount that you're applying for. Typically, you can buy anywhere from $1,000 up to $50,000 per month with the domestic carriers.
All right, well,
Now,
let me just stop you there. If I have a $50,000 nut a month, right?
Per month.
If I have a $50,000 nut, I think they're going to want to see my they're going to want to see my 1040,
Yes,
right?
absolutely.
And my business.
Yes, they'll want to see the business returns
Right.
as well as the personal returns. They want to make sure that your business is not running in the negative.
Right.
Okay. And yeah.
Okay, so I'm going to have to come up with documents for my business, my 1040. Is there anything else? Am I looking at that first before I even talk about it? I need to see those documents before I even want to talk about it.
Well, I think that it's okay to talk about it because there's always a carrier out there that can do something one way or another. The difficulty comes when you promise that a carrier is going to deliver something, obviously, that you're not sure that they can deliver. However, you can certainly communicate to the client that if you give me those documents, we'll find out what's available to you.
And we're using 50,000 as an example, or is that one of the big caps?
That is the ceiling. Now, you can go beyond that, but we have to go to the Lloyd's of London market. And then there's no cap.
Wow, Lloyd's of level. Well, now I'm curious, just for my sake of my audience, how many times do you punt and go to Lloyd's of London for, I want the full Monty on my entire accounts payable?
More often than you think.
And they're okay paying it.
Yes.
See, I'm fascinated because there's about 24 carriers left in DI and really only a handful. I'd call the top 10 and then you're done, right? Now I'm adding on, we're always talking about caps, limits, right? Now we're talking Lloyd's of London, and if you could stroke the check, they can cover it.
They can issue it.
Unbelievable. And we do that. You guys do.
Absolutely.
Lloyd's of London. Unbelievable. Well, you've heard it all here. Disability buyout. It could be the way into businesses that you never thought before. Remember, you can watch this show and all our shows on DI just by going out to our website at thebiz.tv. And don't forget, you can follow me on Twitter, Facebook, LinkedIn, Pinterest, and Google+. That's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.